15th of November at 11 a.m. as we talk about the power of price in the process of investing. Send in your queries using the hashtag AskBQ to bloombergquint.com. Write to us now. Use the word Ramdev in all your queries.
Hello and welcome to Bloomberg Quint. The top headlines. Indian markets trade in a narrow range. Small cap index, however, outperforms. And Unichem Laboratories gains more than 2% on reports of an acquisition by Torrent Pharma. And Hindalco is expected to post a good set of numbers in the second quarter, but input costs could dent margins. And the Nikkei India Services Purchasing Managers Index comes in at a 4-month high at 51.7 in October. Those are your top headlines. I'm Agam Vakil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our analyst for the day, Sameer Karla of Target Investing, independent market expert Sharmila Joshi, and Lancelot Dikuna of WealthWiz Advisor. All of them join us on this show. Today on Hot Money, we'll be discussing stocks like Ujjivan Financial Services, Infibeam, Ashoka Buildcon, Glenmark Pharma, and Motherson Sumi. Let's talk about Ujjivan. Numbers came out after market hours yesterday. Even though the company reported a loss, the counter is up almost 5%, given the fact that asset quality saw an improvement and the management actually indicated that in the third quarter, they will be back into the black. So what should one do? Is the worst over for the company? I'll start with you, Lancelot. What's your view on Ujjivan? Is it a good bet right now?
I think I'm relatively neutral because, we have seen the price rise, but the business model of the company is good and you have seen it getting transformed into a small finance bank. I think the numbers this time showed clearly that, the NPAs are under control and there is growth in that sector. So we should be able to see at least a 25% growth in the loan book, which is actually good. Cost of funds should come down. Then their cost to income ratio should improve. So I think a lot of positives in the stock, but it's all built into the price at this point in time. So maybe I would wait for any correction to buy.
What about, because what has happened is you're saying this growth will come in, but if you read what the management has said and if you analyze the results, basically the growth is not coming in the non-MFI segment. So basically still they are very dependent on the microfinancing segment. So do you think that they will be able to turn that around?
See, the MFI segment itself is also growing. So it's not a bad thing that the growth is not coming in from there, but obviously over a period of time they need to diversify their revenue streams from non-MFI segment, and that's the whole idea of becoming a small finance bank. So I think that's a process which will take a while. So over a longer term, yes, that will also grow and you'll see them do better. But at this point in time, like I said, price is actually already reflecting all the possible positives.
It's valued, fully valued at this point. Sharmila, do you agree that it's fully valued, or do you believe there is more potential for Ujjivan?
Oh, well, I think you can argue both ways, but I'd be bullish on the stock simply because I think, yes, they've been able to trim their losses, and we've seen that reflecting in the kind of run-up that we've seen in the stock price. And I think precisely just to take off from what you were saying, I think that entire MFI space has also come under quite a lot of uncertainty in this last year. What with demonetization, hitting their the kind of collections that they were able to do, and that whole business model sort of. So what I like about Ujjivan is that now results are reflecting that positive sentiment and their whole move towards that small finance bank, because I think that model is that MFI space is also going to get differentiated going ahead, and I like the fact that they have that small finance bank going for them. So I would say that this space has done well for a reason, and I think that reason still exists. So which is why they were getting that premium, and we are now getting back to that kind of a scenario again. So I would still give it a.
Are you happy with the valuations? Do you think they are fair right now?
Well, I think that it seems that to be a tad on the higher side, but as I said, it's on the higher side for a reason. So yes, I'm comfortable with it from that perspective.
Sumi, do you have a view on Ujjivan?
I have a neutral view. I'm a little bearish, but I'm neutral on the sense that the distress is somewhere getting out. But I'm bearish in a certain sense that two factors. See, the only main reason why many of MFIs became small finance banks is to reduce their costs. And somewhere they're achieving it, but the only point is to become an actual bank, there's a lot of resources which the money is required. So there'll be a lot of capital raising, which I think will come in the future once the distress gets out. Second is the main lenders, because of the MFI book, are those small tier 2, tier 3 or rural area people. Now over there, the GST implementation, how much impact have they done on the businesses where these people were employed? That is more important for me to see. So that will result in the loan book growth. So they seem somewhere cautious on that right now. That's why the loan book is also not that great enough, or the disbursals are sequentially up, but on a YOY still low. So somewhere there is kind of a impact of the GST, but where exactly it comes out, that I would like to see.
But this would apply to all small finance banks,
I'm
right?
all over there.
As
in neutral.
But do you like something else in a similar space like what Ujjivan is, or would you be cautious on that space?
See, the only plus point which I give Bharat Financial is the acquisition. So where that turnaround will give me today, if I buy Bharat Financial, indirectly I'm buying IndusInd. So that kind of gives me a 8% or 6% discount today to the IndusInd Bank stock price. So I rather buy in that because of that trigger, because the reach also converts to a banking reach.
Okay.
So that trigger I think is a bigger over there rather than anything else.
Okay, so that's the view that's coming in on our first stock, Ujjivan. Lancelot is bullish on it, but he says that valuations are fully priced in. He would wait for a lower level. Sharmila is saying that valuation, that premium is justified, and she is bullish on it. And Samir is rather neutral on this entire space. The only stock that he likes in this entire space at this point of time would be Bharat Financial, because it's in an indirect play on IndusInd Bank. Let's move on to the next stock, and that is Infibeam. The stock is up almost 25% in the last 2 days. It's an F&O stock. So, Lancelot, any clue what's happening?
Well, I have no clue actually, but from a valuation perspective, I think the stock has run up a lot on the anticipation that it's going to become another Amazon or another Flipkart. But I think it's still a long way off, and being a small company in a space that's highly competitive, I think there are a lot of challenges that the company will face. While it is one of the few companies in that space which are profitable at a bottom line, the extent of profits and the kind of growth, last year revenue was 440 crores and profit was about 43 crores. If they have to justify an 8,500 crore valuation, then I think the profit growth has to be at least doubling every year. And that seems a little bit unlikely, given that when they have to grow bigger, there will be a lot of competitive pressure. They will be forced to reduce margins, because then they'll be competing in the space along with the other big players. The acquisition that they did on CC Avenue might help them in terms of getting some traction on the services point of view, but there also the margins are also getting squeezed, because a lot of these payment banks are now shifting, like payment avenues are shifting to banking system directly. So everybody's coming out with their app. So margins will get squeezed and it will become a difficult market over a period of time.
But personally, do you see, because if you shop on Amazon, you shop on Flipkart, does Infibeam have that online presence at least? Because I have hardly seen anyone talk about Infibeam as a online retailer.
So that's what I mean. If you look at it in perspective, Amazon does, probably in India, even Flipkart, I think does about $2 billion in sales.
But they're loss making.
They're loss making, but if you take Infibeam, does 400 crores of sales. So when you look at it, like for it to do 2,000, 5,000 crore sales, 10 times this level, it's going to require a lot of investment and marketing costs, which is not there at the moment, and that would automatically bring down profits and make it loss making. So it's very difficult to justify such a large valuation at this point of time, merely on the fact that yes, it's profitable and it's growing at 100%, but you need to see what is growing at 100%, what is the quantum and where it can reach.
Okay, Sharmila, value a PE of almost 75 times on an FY19, price to book of 10 times. Are these valuations justified given the fact that it's the only, you have to give them credit that they're profit making, they're cash rich. there is clear market there, but does all this justify?
So I think that's precisely the thing that to just add to the discussion that you are having, that within this space you have limited stocks which you can take exposure to. I mean, in the sense that you talk of Amazon and the kind of presence it has globally, or Flipkart, what it's doing, how much money it's invested over the years since its existence, etc. So you don't have too much of a listed exposure to that kind of space, and periodically people like these stories, because they see the kind of shift that you're getting online, etc., etc. And the numbers for Infibeam have been quite good. I think the quarter results that I recall seeing a couple of days back, those were also pretty much, I mean, they ticked all the boxes sort of. So I'm a little confused, which is why I'm neutral, because I don't really understand this business too well. And I mean, if Amazon is not making a profit, that is also for a reason. I think that's pretty well known. So it's unfair to compare it like that. And maybe, some interesting things could happen in this space going ahead. So I really don't have a recommendation on this stock per se.
Okay. Samir, you don't have a view, but do you know what's happening with Infibeam? Is it like there is no other alternative play? Is that why people are buying Infibeam?
See, somewhere you have to give the credit to the company as well. See, the price is driven by the investors, but the company is still delivering. The only part which I see interesting in the whole firm, whatever I've read through, is they have a stake in CC Avenue. Now CC Avenue has a good share of payments. So that can drive that. After the merger, if you see, the prices have gone up of Infibeam really high. So that interest might have generated through the accessing of holding Infibeam, you get to the access of a payment company. So that's where I see the only plus point of them. And meanwhile, the company is also performing. How far is the valuation justified? That only investors who are investing right now can tell. Because the only point is, I rather give it few more years to have a track record, to give it a 50 plus kind of a PE for a sustainable time.
Okay, so that's the view that's coming in on Infibeam. Lancelot believes that valuations are clearly not justified. Sumi does not have a view on the stock, but Sharmila is rather neutral on the entire space. So let's move on to the next counter, and that is also another buzzing counter which has done well for itself over the past few days. It's flat in today's trade, but if you look from mid-October or probably the last week of October, the stock is up almost 25%. I don't know whether it's Bharat Mala or any other infrastructure order. They haven't gotten any order as such, but certainly the counter is buzzing in trade. I'll start with you, Sharmila. Ashoka Buildcon, any view, or the infrastructure space, anything else that you like in this space?
I think last week we discussed IRB Infra,
Yes.
and I think those same reasons in that sense hold true for Ashoka Buildcon, because at the end of the day, the reason I liked IRB Infra was the fact that this whole Bharatmala project, the kind of orders that it's talking of are substantially higher than what we currently have as your yearly budget. So that's a huge potential that you're seeing. Their current order book is also, I think, fairly good. I think you're talking of in the region of 6,800 crores thereabouts. So yes, I think from that perspective it's fine. It's just that we've precisely for this reason, we've seen a good rally across in this space. So now this stock is sort of, in terms of valuations, pretty much there. So I think I would wait for the numbers.
It's 40 times FY19 earnings.
Exactly.
For an infra company, 40 times it's not cheap by any chance.
By any this. So that's the only this. But I think the numbers are due on 10th November, if I'm not mistaken. So you need to take a look at those, and then going ahead, if they really are able to participate in any large size projects, then maybe this valuation that we are talking of is justified. So as of now, I'd be neutral on the stock, and I don't really have a recommendation on it.
Samir, I was going through Bloomberg and I saw the analyst recommendations on Ashoka Buildcon. 21 buys, 0 hold, 0 sell. So what is it that in this company that even at 40 times it's an all buy?
So I'm neutral on the firm right now, given the price. At 150, 145, we were bullish on it, because see, there are two parts to it. One is the EPC part and one is the BOT part. BOT part, a valuation of 75 to 76 rupees is given by the analyst. That's what everyone, that 21 analysts were given a buy, right? And the EPC part, the BOT is a standalone system. Now that doesn't have any kind of debt. So people are seeing right now it's standalone numbers. So they are giving more weightage to a standalone number as a consolidated firm. So that's where I see, because they are conservative in the way of working capital on the standalone basis. On the consolidated basis, obviously it's a EPC, so whatever construction needs to be done, you need to require a debt for it. So that's where they're even conservative on bidding the orders. So they have a JNPT, which is a bigger project for them. So that execution will drive this year's number for them. So that's why everyone I've seen from the analyst community is more bullish towards it. But I think now you'll see after this quarter some kind of people coming to hold, because according to everyone's target and even ours, it's somewhere priced in now.
Okay. Lancelot, any view on Ashoka Buildcon?
Yeah, I think I would agree. It's been priced in. Yes, we are seeing better order visibility, which shows that things will improve for the company. But valuations are really priced in. So they're pricing in all the upside at this point in time. So one should rather wait rather than.
Anything else that you like in the infrastructure space? Do you think that last week Sharmila was there and we spoke about this entire Bharatmala project, but do you think these are all orders, but they've not come in yet? So do you think that the order visibility will improve, because infrastructure as a space has been going on for the past 10 years and pretty much on the order side nothing has happened.
Sure.
So anything else in the infrastructure space, and do you see that this traction coming in?
I think L&T is a good infrastructure bet. The reason being, L&T had two problems earlier. Why it didn't participate so much in the rally as the other infra companies, but they had a lot of assets which were locked up, and they have been able to monetize some of those assets, and some are in the process of being divested, and that will free a lot of cash. So what would happen for L&T is it will go back to its core business, which is again focus on the engineering services and complex installations, etc. And that is where the order book will pick up.
Okay.
For them, the good part is for the next year at least, they already have significant orders for implementation, so they'll be able to meet their guidance on the growth front. And possibly when these since the delays are there, we've seen announcements, maybe those will kick in after a year or so. And when that happens, you could see L&T bagging a significant portion of the new spend, because it's again focused on certain areas like metros, railways. This is where the traction is much faster. In the traditional areas of ports and bridges and dams and roads, there has been a slowdown because of land acquisition, other things. But we look at the metros, we look at railways, there the spending and the contracts are moving much faster.
So you're bullish on L&T as an infrastructure. So that's the view that's coming in on Ashoka Buildcon. It's a consensus neutral rating that all of our three guests have given on the counter. Before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the next stock is Glenmark Pharma. The company came out with numbers after market hours yesterday. The revenues were flattish in trade, profits was down 7%. Margins coming in higher than what the street was anticipating, but there are certain concerns still there. If you go through what the analyst con call was there, not too much of a positive outlook was given by the management in terms of the new launches, the new price high, the new in terms of new launches, in terms of competition and prices. What should one do? Is debt a big concern, or has pharma bottomed out? I'll start with you, Samir. Glenmark Pharma. Any view?
I'm bearish on Glenmark, especially because of one main reason is, they have around 80 days of inventory sitting on the books. That is huge. That what it does, it has a ripple effect on the working capital. So working capital, you need to keep on raising debt. That's what the system is doing.
Yes.
The investors wanted some kind of assurance that there will be a reduction in debt in a bigger way, so that the books could ease up. But due to the US pricing pressure, which was more than expected by the company itself, and then they're tagging it that next 2 years will still be a pressure system, I think the working capital requirement will just increase, because you're not able to push the inventory at that quicker pace. So there will be a number pressure on the firm as it is right now. So I feel till the time they don't rectify that working capital requirements, nothing will get better.
But isn't valuation, it's one of the cheapest stock. I think it's trading at 13-14 times.
See, the only,
Does that not give you comfort in Glenmark?
see, maybe for a 10-20% kind of upside, yes, but not for a long-term investor or not for a guy who's looking for a cheap valuations. In a certain sense that when your inventories are so high, especially in the pharma company, and your cash flow generation gets hit, that's where the whole rolling ball happens. And for them, US is the main driver. So for them, US has to pick up for them to compensate the inventory levels.
And that is clearly not happening.
That's somewhere they only say that it'll take 2 years.
Okay. Anything else that you like in the pharma space?
So for me, the top pick is Sun Pharma.
Okay.
I'm a little biased because all over whatever has happened into the pharma industry, their cash flow generation has not got hit. Their inventory levels are still at those levels, and their erosion is not that drastic as compared to other pharma companies which I see.
Okay, so you would prefer Sun Pharma and this
So,
thing.
yeah.
Lancelot, do you agree with the points that he put out on Glenmark? Do you agree that it's a bearish view, or do you have a bullish view?
I have a bullish view because I think yes, there is a problem with inventory, but I don't think it is something that cannot be managed.
Okay.
Ultimately, if Sun Pharma can improve its inventory, I think so can Glenmark.
But
It is.
sorry.
Yeah.
Sun Pharma's inventory never went that bad.
No, I'm saying
They
that
have
it's
like
a
a
problem.
half-year inventory always standing on the books.
Yeah. So it's a problem that can be addressed. It's not something that is insurmountable. And what is positive in Glenmark is that they have 3 molecules which will come up for out licensing in the maybe next 6 months, maximum a year's time, and that could give significant amount of cash flow, which could resolve the concerns on the debt side. The other thing is the Latin American business, which was virtually written off last year, has again begun to pick up, and most of them that is also adding to their EBITDA. So from a valuation perspective, the downside is limited in terms of the performance.
Okay.
I don't see too much of a downside in terms of performance, and I see that there could be some positive triggers which will actually re-rate the company in terms of the cash coming in, because when you do these out-licensing deals, they're typically large size.
Yes.
So you get maybe $50 million, $100 million, and that can be significant amount of cash which will resolve a lot of issues that are there.
But that's where the management said that we'll only pay around 200 to 300 crores debt this year. And where I don't see that what you're talking is right in that sense, but if the same thing management is saying, they would have committed a larger number of debt repayment.
No, I think their company also has other plans because they have to focus on their research as well.
Yeah, that's what I'm saying.
So when you make an investment, it's not debt is not the end all of business, right?
No,
you got to make an investment in
they
your
are still
future.
at the lower of the whole system right now. They've reduced on the absolute number.
Yeah, but I
So
think at
which
the end of the
hurts
day,
them.
it's a question of, do you want a short-term gain by reducing your debt, or you do want to build long-term capability? And I have been an investor in Glenmark right from maybe the time it came on the IPO, and they have focused always on investment.
See,
So-
nothing taken from that
Yeah.
kind of a track record. But I feel right now it's more time will be taken for them to get out of those whole system. That's what my view is. Sure.
Sharmila, so you had, I think it's time you took a decision which side this discussion goes, on the bearish side or the bullish side.
I think it's all in the price, what you were referring to, that in terms of valuations, I think a lot of the negatives are now in the price, because I completely agree. I too heard the management, I think just before we went on air, in fact, and I was not very happy with what they said about debt, or overall their outlook didn't sound all that positive going ahead. But I think it's now in the price, because honestly, this is also a stock that I have recommended in the past and at a higher price. And US pricing is a concern for every pharma company, and I think that's the bottoming out that's now left in pharma, because the US FDA issue now seems to be turning in favor of a lot of companies. So that's it. I think it's in the price. So I would tend to be neutral, and I agree that my preferred bet at this point in time would be Sun Pharma over Glenmark Pharma. I would have a buy in Sun Pharma, and I'd have a hold rating on Glenmark.
Okay, so that was an interesting discussion. We have a neutral view, we had a extremely bearish view, and we have a good bullish view on Glenmark Pharma. And the last counter that we'll speak about is Motherson Sumi. slowly and steady this counter has been moving up, and it's trading at fresh lifetime highs. So will this pricing sustain? Will the slowdown that's there in the global auto industry dent Motherson Sumi going ahead? What will happen to Motherson Sumi? I'll start with you, Sharmila, on Motherson Sumi. What's your view?
So, just as we were talking of Glenmark or, some of these companies, you've been tracking them for a fairly long period of time. And, one of the things that I've always liked about Motherson Sumi is that, their strategy is the management thinking and strategy has always been very clear. So there was a bit of a hiccup with that whole Volkswagen issue broke out, and you saw the stock correcting, etc. And I think now they're back on track. I think the kind of acquisitions that they've done globally, the kind of product line that they've built, their new acquisition, that PKC, the Finnish company, I think the way that is seen contributing going ahead, and the entire, the kind of numbers that we are getting globally from a lot of these auto companies, all sort of make me believe that this is a stock where there could be a further upside. So I would be bullish on the stock.
Okay, Samir, do you agree?
I'm bullish on Motherson because, see, since 2002 they have bought around 19 firms till date, and the financials have always overturned. These, when you talk to the management, they'll always tell you these acquisitions are always recommended by the OEMs they supply to. So these companies are already distressed. They already have clients. So Motherson has mastered that kind of art when that comes to, right? Everyone was pessimistic when they took on to the SPA and the European acquisitions which they do. Now PKC, which they have done, makes them enter into the railway side as well. So the wire harnessing goes double in revenues, and the Indian Railways, which is going for the modernization right now, gets more. For them, opens a new business. So that's why PKC was important for them, because the clients PKC supplies to are again bidding for the Indian Railway modernization. So that's where I think that was the plus point. And financial wise, they've been performing throughout the years.
Okay, Lancelot, final word on Glenmark.
I think I'm
also third consensus by okay.
I think I'm also bullish on Motherson Sumi because they have performed when it's required. I think they have, as Sharmila was saying, they have a very clear idea and focus on what they've been doing. They're one of the most efficient utilizers of capital. They've been able to generate ROEs of above 20% for almost 10-15 years. So I think when you look at that company from all financial angles, it seems to be continuing to generate new returns and higher returns, so it will justify the higher pricing as well.
Okay, so it's a consensus buy that we have on Motherson Sumi. Before we wrap up on the show, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, PNB numbers are out. Just wanted to reiterate them. The numbers at this point of time on the PAT side are higher than estimate. Our estimate was 387 crores. It's come in at 560 crores. Gross NPA at 13.3%. It'll be interesting to see what it was last time around. I don't have my papers with me, so I don't know what it was last time around. But as of now, it seems that it's a decent number. We'll try to get more on this. Let's try and see what the other numbers are. So standalone net profit pretty much flat, come in higher than what we had anticipated, stock trading at days high. So I think the gross NPA is something that we need to watch out when we look at banks. So we'll stay with PNB for a while, but with that, it's a wrap on today's Hot Money. Thanks for watching Bloomberg Quint.